So welcome back to the channel, guys. An important episode today, and this is our 5 steps in how we can make it through a bear market, and this is step 2. If you haven't already watched step 1, I'll suggest you go back and watch that, because the first step's just as important, and it's very important that we follow these in order. So step 2, how to apply good risk management. And within this video we're going to be looking at 3 steps on how you can not blow your account and get wrecked in a crypto bear market. And we're also going to have some bonus footage where we're going to be going over together how you can create your own Google Sheets portfolio spreadsheet, and we'll be going over a full tutorial on how you can actually do that and keep track of your entry prices, your average prices, and it's very important. So the risk management is something that people miss out on. People FOMO into the market when they hear good news, and a lot of people don't keep track of where they are, where their buy prices are if they've sold it, where the sell prices are. So it's important that you do have a portfolio balancing spreadsheet to keep track of this, and ultimately it'll put you in a better position to be more successful within the market. So I hope you enjoy the video, guys. Like I say, step 2, let's get into the video. Okay, within step 2, how to apply good risk management, there's also 3 steps on how not to blow your account, and we're going to go over them 3 steps one by one together. After that, we're going to be creating our own crypto sheets, our own Google Sheets crypto portfolio with dynamic real-time price action. We're going to learn how to ladder into trades at levels of structure over the course of the 5 steps, and I'm going to be doing all this with you. So 3 steps on how not to blow your account within our second step, which is the application of good risk management. First step is the 50% rule. Second step, the percentage at risk. And the third step, how much and how often. This is a powerful rule, the 50% rule, and the reason why we apply this to our bear market strategy is that we're never going to buy a crypto top again. So there's 2 sides to the rules. There's the selling side and there's buying side, and we're going to concentrate on the buying side. So as far as the buying is concerned, we're not allowed to buy unless the market or the asset that we're going to be buying is a minimum of 50% below its all-time high. There's not just that in isolation. We'll be looking at levels of structure, support to back up our buy entries, and we'll be laddering in. We'll be showing you guys how to ladder in, how often you should ladder in, and how we're going to overall look at getting our average down over the course of the market until it reverses again and gives us another run. And then we'll be looking at exits as well in step 5 of our strategy. So step 1, the 50% rule. You cannot buy unless the market is 50% below its all-time high. Right, okay, step 2, percentage of account at risk. So one thing that I'd like to do as far as the portfolio split's concerned is to ensure that I've always got some dry powder on the side, some liquidity in stable assets to be able to take advantage of whatever the market gives us, whenever the market gives us an opportunity. A lot of the time the market will give us opportunities at very rare times, and this will be by some form of capitulation or world event or something that happens which pushes price down. We're in a current negative point now as to economic, geopolitical events are concerned with inflation, the war in Ukraine, etc. And it's quite likely at some point this year that we will get that capitulation, and having good risk management and ensuring that you've got a good portfolio which is well balanced ensures that you're always prepared for those occasions whenever it may be. So I'll show you the portfolio split that I like to have, and it doesn't mean to say that you guys should have this exact split, but I have 35% of my portfolio in lower risk assets as far as cryptocurrency is concerned, which is the top market cap leaders, Bitcoin and Ethereum. I have a 20% split in medium risk assets, which is what I consider the top layer ones such as Solana, AVAX, Cardano, Luna, etc. You've got the lower risk ones, the higher risk ones, which would be your Aves, you've got your super farms, you've got the smaller cap altcoins, and then the main part as far as I'm concerned is your 35%, which is in your off risk stable. So your off risk stable would be stable coins and fiat currency, dollars, or whatever currency it is that you hold. So by having this split and maintaining this split, it gives you an edge because you've always got opportunity to buy at levels where the market gives unexpected results and other people haven't got that opportunity to buy because they've just been wrecked. So that's step 2. We'll have a look at step 3 next. So how often are we going to be buying? We're going to be buying small amounts incrementally over a period of time in accordance with our strategy. So we're going to be splitting them up into percentages, and we're going to be laddering in at entry points where structure gives us a bit of confluence to tell us that it's a good area to do so. Ultimately, we want price to go down over a period of time, and we want to take advantage of that, which is the reason why we've got our non-risk asset part of the portfolio, to be able to take advantage of lower prices and ultimately average our price down over a period of time. So I'm going to be showing you in TradingView how you can apply levels of structure and support to your own TradingView charts. I'm going to show you how you can create your own TradingView account free, and we're going to be looking at some indicators to be able to tell whether the market's overbought or oversold at each given level of time. So as promised, we're going to be going over in the next video how you can set up your own Google spreadsheets using Google Sheets, and we're going to have dynamic data that's going to be pulled through, and you're going to be able to tell what percentage the market is from its all-time high, which is vital for this part of the strategy, and we're going to be averaging price in over an allocated period of time and averaging out over an allocated period of time once the market hits above its 50% from its all-time high period. So next up, the Google Sheets tutorial. Welcome back. As promised, we're going to create your own crypto portfolio for you. We're going to go through this together, and first thing that you need to do is go onto Google Sheets. So if you go on Google Sheets, you can use your standard Google sign-in if you have one. If you haven't, you can just sign up and you can use this for free. But we want to go into firstly onto Sheets and go to Sheets. So you'll end up with an option list, and you may actually find something a little bit more suitable for your own liking. But if we just pull up, as this example, the blank spreadsheet, and you'll get something that looks similar to Microsoft Excel. So here we can just change it to our liking. You can add a title, and you can colour in the background by just using a variation of colours. So what I want you guys to do is just to open up the Google Sheets and have a little mess around with these tools here. Like I say, it is similar to Excel, and get your portfolio looking like how it is that you want to. So we're going to end up, like I say, with something like this, and we've got here different columns for different things, and you'll see we've got the token name, which is what the project is, the ticker, which is an important thing. You've got the current price, its all-time high, percentage from its all-time high, and this is the power of laddering in. So in this strategy, remember, we're trying to bring our average down, and we've got here 4 examples of 4 different buy prices. Now this will increase or it will reduce depending on what opportunities the market gives you, but this is just an example. You can simply just right click and add if you wish to add another column. So you've got your average bought price here. So we'll be able to calculate from all the different buy prices what the actual average of that price is, and the total amount bought, it'll automatically calculate that as well. And then we're just going to replicate that for the actual prices sold here. So it's kind of a dynamic dollar cost average strategy with an edge. So firstly, the first thing I want to show you is if we go over the Bitcoin example, and then we'll add another one ourselves. So you've got the token name, which is Bitcoin, the ticker there. Now this is where the magic happens, because this is actual real-time data. So the 34,629 is the Bitcoin price at the moment, and there's a formula up here which I'll tell you now, but what I'll do is I'll leave it in the description so you can actually see that, and you can copy and paste it and then just duplicate it and add with your own cryptocurrencies within that. So the formula equals import data, open brackets, http // cryptoprices.cc / BTC, close brackets. So like I said, I'll copy that in the description, and I'll put it in the description. You can just copy and paste as you like. The next one's the all-time high, which is also real time, so it's a similar calculation, but it's got an ATH at the end, and I'll also put that in the description as well. The next one is the percentage from the all-time high, and this is important within our strategy because we're not allowed to buy unless the market's 50% below the all-time high. So Bitcoin's not a buy for us at the moment. We'll know that now. And how you calculate this is you've got to put a formula in here yourself, and we'll do that formula together now. So what we're looking at doing is, in fact, we'll just do it together. So we've got equals, open brackets, and then we're taking the current price, we're taking that from the all-time high, close brackets, and we're going to divide that by the all-time high, and then enter to get our 49.85%. So you might need to go back and watch that a couple of times if you're not that familiar with that, but it's basically the current price, take away the all-time high, and divided by the all-time high. Now the price bought 1, 2, 3 and 4. Now how we're going to calculate this, let me just get rid of that, is simply just highlight these 4 boxes. There's a function button up here. If you click that function button and then click average, it's going to automatically put a calculation in there for you, and then just press enter and you get an average there. So let's go through and put a couple of things here and give you an example of that. So the average 50 in there, if you change that, see that changes in real time. So that's a simple one. And your total amount bought, what I want you to do is just an equal sign, open brackets, and then what we're going to do is we're going to add each one of these. So click that, add, click, add, click, add, click, add. Sorry, not a final, add, close brackets, and then enter. And if we just go through and it fills in our average and the total amount bought. Now that's replicated through the price sold as well. So if you just replicate the process through the price sold, you get your average price sold and your total amount sold, exactly the same method. Now before we go, we're going to go through and we'll do another example. And what I'm going to do is I'm just going to highlight this and pull that down. We've got a duplication of Bitcoin there, but we're going to do Ethereum. So if we change that to Ethereum, ticket ETH, and we've got Bitcoin's current price there. So if we just go into the formula above here and where it says BTC, we're just going to change that to ETH, which is the ticker for Ethereum, and then enter. And we've got the current price for Ethereum. Replicate that with the all-time high. And we're 47.56% down from all-time high on Ethereum. You could do the same for the price bought. Just pull that down. In fact, you can do it for everything. So if we just go right across, and then we go, you see that it calculates the average for us, and do that the same for the sold. So I hope you found the video useful, guys. In step 3, we're going to be looking at how you can set up your own TradingView. We're going to be setting up a TradingView on the free version, and we're going to be applying, I'm going to show you how to apply levels of support and resistance to your charts, which is also important to this strategy. We're going to be buying at zones of strong support whenever the market gives us an opportunity to bring our average down. We want to be able to take that opportunity. So it's going to be a constant portfolio remanagement when the splits are uneven in comparison to what we showed you earlier on in the video. We're going to show you some simple indicators to tell you whether the market's overbought or oversold. So give us a like, thumbs up, guys, share the content with others, subscribe, and put the notification bell on, and you'll see when step 3 comes out as it comes out. Thanks guys, have a good day, bye now.